What are the statistics driving the Federal Reserve and the stock market to the brink of a serious collapse? Which growth stocks and value stocks are worth a possible look at possibly buying and holding for the long term now? This year has been a long descent for the stock market. Will it ever end? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, we've been getting a smattering of good news and bad news as far as the Federal Reserve has been concerned.
No! God, please, no! 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 No!
Mostly it's been bad news, but we're starting to get a smattering of good news. Now, the good news can't be too good, or that's really bad news. But the good news, as we will see, seems to be that inflation might be being brought into bounds, at least somewhat, or at least is starting to be brought back into regular shape. And we will see if this continues. The mortgage rates have affected home buying. Some localities and cities are reporting that home buyers have been reduced by about 50%. Of course, that's mostly anecdotal, but the hard statistics on it is that in October, about 5.9% of home sales were reduced. It was reduced by 5.9% in October, and then existing home sales, were reduced by 7.7% in November. So that seems to be having an effect on home buying. People's confidence in the economy, the consumer confidence, the Conference Board's consumer confidence is way up. Okay, the higher the number, the more confident people are. It was expected to be 101 was the number it was supposed to come in at, and it came in at 108. 108.3 to be exact. Okay, and so this is bad as far as the Federal Reserve is concerned, because people are going to keep spending, and they want to reduce spending and cut the economy down. The GDP, in the past we always look for a strong gross domestic product, a strong GDP. That was always good news, but it's not good news anymore, okay? Because the Federal Reserve sees that as a sign that they're tamping down the economy and bringing prices into line, and that's what they want to do. The gross domestic product was expected to come in at 2.9%, and it came in at 3.2%, which is going to encourage them to keep interest rates high and keep raising them. It's good news to the Federal Reserve if unemployment increases. So hearing that Micron Technology, whose symbol is MU, hearing that they were going to lay off about 10% of their workforce was music to the Federal Reserve's ears. These are the weird times we live in, these fairy tale times where bad news is good news. I hate times like this. I can't wait till we get out of this. Anyway, they have about 48,000 jobs worldwide, Micron Technology does. So that represents almost 5,000 technology workers without a job. And Micron missed on both earnings and on revenue. And they talked about a nagging glut of semiconductors. We didn't have enough semiconductors now, and now we're starting to get a nagging glut. And man, that really indicates that things are slowing down. The technology company I'm most enthused about for right now is Super Microcomputer. Its symbol is SMCI. And looking at the chart, you can see that it's a fairly small company. It's a little less than a $5 billion market cap. And it's gone from $40 to over $80 in the last year, and it was over 90 at one point. So it's pulled back a little bit here, and I'm thinking a person might be able to get a buy on it. And if we have a little bit of a Christmas rally, we could be looking good. And I'm especially encouraged when a company is doing this well in an environment where things have just been crashing. It makes computer equipment, mainly servers, and so they've definitely got a demand for their product to be doing this well. Their price to earnings is only 8. It's not overpriced at all. It's undervalued, as a matter of fact. Its price is around 82 now, and its value is around $111. So there's plenty of growth left in it, and especially when you look at its earnings growth rate is 42%, and that is just outstanding. So this has been a favorite of mine for a while now, and I think now is probably a good time to buy it when it's pulled back somewhat. And I think its future prospects look good with these kinds of statistics to support it. Super microcomputer is the only technology stock I can get truly excited by at the present moment. We're going to have to wait for things to clear up and improve a lot. I found some value stocks, and it was surprising how well some of them have done. Notable among those is Caterpillar. Caterpillar's symbol is CAT, a cat. For Caterpillar. They're known for their bulldozers and other heavy construction machinery, and they make some farm equipment too, but they're known for the heavy duty equipment for construction. Looking at the chart, you can see that Caterpillar's had an up and down year, but it is positive for the year. And it recently caught fire around October and has been going up since. And I think that's mainly because of the infrastructure bill that Biden and Congress passed. And I think that's going to continue, and I think that's going to continue to drive the stock, as it's a long-term infrastructure bill that should keep drawing business Caterpillar's way. And it's not an overvalued stock. Its value is around $239. Its value is somewhere around $251. Its price to earnings is 16, which is decent. It has a good earnings growth rate of 19%. And I think people are piling into value stocks like Caterpillar, which is going to continue to drive it forward. So especially if we get a mini Christmas rally into New Year's, I think Caterpillar is going to be participating. Among the major pharmaceutical companies, Merck's statistics stand out as a company stock to buy in the pharmaceutical range. They make pharmaceuticals, they make vaccines, they make animal health products. In fact, if you get medication for your puppy dog or your kitty cat, there's a good chance that Merck might have had something to do with it. And they do a lot of work with cancer. They've got a long and strong pipeline, and this is a company to conservatively invest in. It's going to be around. It's been successful, and it probably will continue to be successful. Even during difficult times, people need health care, and companies like Merck are going to do okay. And looking at the chart, you can see why Merck, a good old MRK is the symbol. You can see why it's such a relief to own a stock like this. when you have a year where everything just keeps going down. To have something that just keeps going up is a nice change of pace, right? So its price to earnings is around 15. Its earnings growth rate is a solid 18%. And this is during a year that is just bad. So they're really hanging in there. I think they're going to be around. Their price is around 111. Their value is about 130. So it's undervalued even. So I can see why people want to pile into major pharmaceutical companies, and I think this might be one of the best of the bunch, if not the best of the bunch. My other favorite large pharmaceutical company is Pfizer. Its symbol is PFE, and they are famous, of course, for helping us fight the thing that's been ruining our lives since 2019, and they have a new market. The Chinese now have millions of people infected with the thing, okay? And so I think Pfizer is going to be there to save the day, thankfully. And so that's very good news for the Chinese. They've entered into contracts with Pfizer, and also the black market is selling the things that fight the thing. They're selling it like hotcakes. So Pfizer's going to be making lots of money, some of it coming from the black market, probably indirectly. So it's probably another third party getting it and then reselling it. It's a solid company. It's a very major company. Its price is around $51. Its value is around $65. So it's an undervalued company, and its price to earnings is only about 10. And its earnings growth rate is a very solid 23%. I probably misspoke earlier. I think the numbers are telling me that I have to favor Pfizer if I'm going to look at large pharmaceutical companies. And I think it's done the country a huge service in getting us away from the thing. Be sure to smash that like button and subscribe if you haven't already done so. Hit the notification bell if you want to be notified of future videos. Good luck to us all. I think we could have a little bit of a Christmas rally here. Maybe the Fed's going to calm down and only raise by 0.25%, a quarter of a point on February 1st. And the interest rate tools are indicating that they're like 75% likely to raise it only 0.25. And my guess as to what's going to happen is that they'll raise it 0.25 on February 1st and probably 0.25 at the meeting after that, which will take them to 5%. And probably they want to stop and pause and see how 5% affects the economy before they do more damage and destroy the economy, because there's a delayed impact of about 6 months to each of these increases. Thank you for listening.